All right, so today we're diving into something pretty interesting. Um, Germany's dealings with Bitcoin, and specifically this like huge sale of seized Bitcoin that they did that in hindsight. Well, it looks like they could have made a lot more money.
Yeah, this case really highlights, the challenges that governments face when it comes to, digital assets like Bitcoin
Hmm.
and trying to sort of reconcile their existing legal and financial frameworks with this new volatile asset class.
Okay, so just to set the stage, Germany sold a ton of Bitcoin earlier this year, like almost
Yeah.
50,000 Bitcoins. It made a good chunk of change, about $2.8 billion. But what's really interesting is that they could have made almost double that amount if they had just held on to it a little bit longer. We're talking about a difference of almost $2 billion.
Wow. Yeah. So the question is, why did Germany sell when they did? And the answer lies in German law.
Yeah.
German law mandates that seized assets have to be liquidated if their value fluctuates too much.
So it wasn't like they were trying to time the market or anything like that. It was purely a legal obligation.
Yeah. Exactly. Yeah. It was a risk management strategy to
Mhm.
prevent the government from being exposed to potential losses if the market were to suddenly, take a downturn.
Okay, so to be clear, they weren't like trying to make a quick buck or anything.
No, not at
It
all.
was all very much by the book.
Yeah, definitely.
Interesting. So where did all this Bitcoin come from?
Well, it was actually confiscated from this movie piracy website called movie2k.to.
Movie 2K. What is that? Like Netflix, but illegal.
Basically, it
Hmm.
was a big deal back in the day. They had tons of movies and TV shows available for free. And I guess they were using Bitcoin for transactions.
It's kind of ironic, isn't it? The biggest Bitcoin seizure in German history. And it came from a website that was all about pirating movies.
Yeah, the irony isn't lost on me. But hey, that's how they ended up with all that Bitcoin in the first place.
So just to kind of wrap this part up, they were just following the law,
Yeah.
right? Not some rogue trader making a bad call.
Exactly. It was a calculated move based on their legal requirements.
But of course, the irony is that by following the rules, they missed out on a way bigger payday because Bitcoin's price went way up after they sold.
Yep, that's the way it goes sometimes.
So what caused this surge in Bitcoin's price right after they sold? Was it just typical market volatility, or was there something else going on?
There were actually a few factors at play. One of the big ones was this thing called the halving.
Halving.
Yeah, so basically every 4 years or so, the rate at which new Bitcoins are created gets cut in half.
Right.
This reduces the supply, which naturally drives up the demand and the price.
Okay, so it's like a limited edition item.
Exactly.
The fewer there are, the more valuable they become.
Right.
And this halving happened around the same time that Germany was selling their Bitcoin, right?
Yeah, the timing pretty much lined up. But that wasn't the only thing going on. There was also this growing sense of optimism
Yeah.
surrounding certain political and regulatory developments at the time.
Like what?
Well, for one, Donald Trump's recent election victory seemed to boost confidence in the markets. And there was also some talk about potential positive changes to U.S. regulations regarding cryptocurrency.
So a bunch of things kind of came together at the right time to push Bitcoin's price up.
Yeah, it was like a perfect storm.
Interesting. Now, you mentioned earlier the term strategic reserve asset. What does that even mean when we're talking about Bitcoin and national economies?
Well, a strategic reserve asset is something a country holds as part of its financial reserves to kind of help mitigate risk and, provide a sense of economic stability.
So traditionally, this role has been filled by gold, right?
Yeah, or the U.S. dollar.
But now the question is, could Bitcoin, with its decentralized nature and limited supply, could it potentially serve a similar function?
That's the big question.
So some people believe that Bitcoin could be a kind of digital gold,
Right.
a safeguard against economic uncertainty. But you also mentioned some risks, right?
Yeah, Bitcoin is known for being very volatile. Its price swings wildly compared to things like gold or the dollar.
So that makes it unreliable as a store of value.
Well, it raises concerns, especially during a major economic crisis. Imagine a country relying on Bitcoin reserves during a global recession. If its value suddenly tanks, that could make the situation even worse.
Yeah, that makes sense. It's like a double-edged sword, right? Big potential for growth, but also a lot of volatility. So how do we weigh those factors when considering whether it could be a good strategic reserve asset?
That's the million-dollar question. There's no easy answer. Some people think that Bitcoin's potential to grow outweighs the risks, especially if you're looking at the long term. Others are much more skeptical. They point to the fact that we don't have a lot of historical data on Bitcoin, and the cryptocurrency market is so unpredictable.
So it's basically a gamble.
To a certain extent, yeah. Yeah, it's a tough call, and Germany's case really illustrates, the kind of dilemma they were facing. On one hand, they had to follow the law, which is all about minimizing risk and, being cautious. But on the other hand, they might have missed out on a huge opportunity by not being a little bit more, well, a little bit bolder, you could say.
So it's like they were stuck between these two worlds, right? You've got the
Right.
traditional financial system, which is all about rules and stability.
Yeah.
And then you've got this new crypto world, which is all about taking risks and embracing the unknown.
Exactly. And this actually brings us to another interesting point. Because around the same time that Germany was selling off its Bitcoin, there was this company called MicroStrategy. And they were doing the exact opposite. They were buying up as much Bitcoin as they could.
MicroStrategy. I'm not familiar with them. What do they do?
They're basically a business intelligence firm, but in the last few years, they've become pretty famous for their Bitcoin investments. Their CEO, Michael Saylor, is a big believer in Bitcoin. He thinks it's going to be huge.
So while Germany was selling, MicroStrategy was buying.
Yep.
It's pretty wild to see that kind of contrast.
Yeah, it just goes to show you that there are very different ways of looking at Bitcoin. Some people, like Michael Saylor, see it as a long-term investment, a hedge against inflation and economic uncertainty. Germany, on the other hand, had to play by the rules. And those rules basically forced them to sell.
So Germany was being cautious, following the established playbook, and MicroStrategy was making a bet on the future.
Exactly.
And so far, it looks like that bet is paying off for them.
Yeah, Bitcoin's price has been going up and up. And their holdings are now worth a lot more than what they paid for them.
Their strategy seems to be based on the idea that Bitcoin's value will keep going up over time.
Right, and a lot of people believe that. They look at the limited supply of Bitcoin and its growing popularity, and they see it as a sign that the price will inevitably continue to rise.
But of course, there's no guarantee, right?
Of course not. It's still a risky investment, but it's a risk that some people are willing to take.
You know, this actually ties into something we talked about earlier, the idea that some countries might start hoarding Bitcoin and creating this sense of fear of missing out for others.
Right.
I think you mentioned a German politician, Joanna Kotar.
Yeah, she's worried about what might happen if a powerful country like the US starts buying up tons of Bitcoin.
So what's the problem with that? Why is there this fear of missing out?
Well, imagine if the US suddenly announced that they were buying a ton of Bitcoin. That would send a signal to the rest of the world that they think Bitcoin is a really valuable asset.
Like it's on par with gold or even the dollar itself.
Right, and that could lead other countries to feel like they need to buy Bitcoin too, before the price gets even higher.
So it could trigger a global scramble for Bitcoin, like an arms race.
That's the fear.
That sounds pretty destabilizing.
It could be. You could end up with this situation where certain countries get left behind in the Bitcoin race, and that could create new forms of economic inequality.
It makes you wonder if anyone's really thinking about these long-term consequences.
I'm sure some people are, but it's definitely a complex issue. We're talking about potentially reshaping the global financial system.
It's like we're entering a whole new world.
I think that's a fair assessment.
And the old rules might not apply anymore.
Yeah, we're in uncharted territory.
It really does feel like we're witnessing something historic, like the beginning of a new financial era.
Yeah, I think you're right. I mean, cryptocurrencies, especially Bitcoin, are really shaking things up. They're challenging the way we think about money and finance.
And it's not just a small group of techies anymore. We're seeing big companies like MicroStrategy pouring money into Bitcoin. And governments are starting to realize that they can't just ignore it.
It's like this parallel system is developing right alongside the traditional one. And the question is, how do we manage this transition? How do we balance the potential of this technology with the risks that come with it?
And it's not just about the technology itself, right?
Yeah.
It's a whole new way of thinking about money and value.
Absolutely. Bitcoin is decentralized, which means it's not controlled by any one person or institution. That's a radical idea compared to the centralized systems we're used to. It makes us question the role of governments, the nature of money itself.
It's like we're being forced to rethink everything we thought we knew about finance.
Yeah, it's a pretty profound shift.
Yeah.
And we're really just at the beginning of it.
So when we look back at Germany's situation, it seems like more than just a missed opportunity. It's almost like a clash between these two worlds, the old and the new.
Yeah, Germany was stuck in the old way of doing things. They were bound by their laws and their risk-averse mentality. But MicroStrategy saw the potential of this new world, and they weren't afraid to take a chance.
And at least financially, it looks like MicroStrategy made the right call. But it raises some interesting questions about how we balance innovation and stability, especially in a world where the financial system is changing so rapidly?
These are really important questions.
Yeah.
And there are no easy answers. The decisions we make now are going to have a big impact on the future.
So for our listeners, what's the key takeaway from all of this?
I think the most important thing is to recognize that we're at a crossroads. The financial world is changing, and we all need to pay attention. Whether you're an individual investor, a business owner, or a government official, it's crucial to be aware of this shift and to be part of the conversation.
So it's a call to action for all of us to help shape this new financial future. So to wrap things up, we'll leave you with this thought. If you were in Germany's shoes, knowing what you know now, would you have played it safe and followed the rules? Or would you have taken a risk and embraced the uncertainty? It's a question that might reveal more about your own vision of the future than you realize.
Yeah, there's no right or wrong answer. It's all about how you see the world and where you think things are headed.
And with that, we'll leave you to ponder that. Thanks for joining us for this deep dive, and we'll see you next time.